Welcome to GTM's tax automation series on one-source tax provision functionality. In this episode, we're going to talk about filing groups. And to go into that, a filing group basically allows you to designate a parent or a filing unit within the software. The recognition is that not all entities are filing standalone, and if they're not filing standalone, do we want to have everything posted at the individual entity level and then have to do a series of reclasses just to get things correct? So once you've created a filing group, it will allow you to determine NOL utilization across the entities that are included in your filing group. And similarly, if you need to do a valuation allowance or take a valuation allowance off, that needs to be done at a filing or consolidated level, that can be done. And from the payables perspective, the posting of any payable entry having to do with the provision calculation or the return to provision calculation will no longer post at the individual unit level. It will post at the parent. So that will take away the requirement to kind of reclass entries from individual units that don't actually have a filing requirement with a jurisdiction from entities to the parent. So how do we go about doing this? The setup is in the details area under properties. And as you can see here, I've got my unit code 160. And my filing unit is Dunder Mifflin. So had the filing unit also been 160, then that would have been set up as a standalone filer. If you are doing it via import, use the #U# unit tab, and your individual units will be on the left. In column AF is the filing unit. And what you want to do is enter the parent or the filer in this filing unit column. So as you can see, I don't have, with the exception of unit 100, that's the parent filer. On the remaining entities, I don't have a one-for-one match. So let's just go into the software. So in my datasets area, I'll find that unit 160 again. And I am going to go into properties. And you'll be able to see my items there. Now, how does this impact NOL automation or VA automation at the individual unit level that's not in a filing? That's not a parent. As you can see, this area has now been deactivated. If you are a unit that is not your own filer, as in you are not a standalone unit anymore, the system recognizes that we've designated a parent filer for you, and only the parent will be allowed to automate NOLs or valuation allowances. So if we go into the reporting area, under the report level, your unit sub-consolidation and filing unit tab, the filing unit tab will now include your parent filer. So until you activate a filing unit or a filing group, that unit will not show up here. So I'll be able to pick that unit to run a variety of reports. So if I was to run your tax provision report, I can still do my breakout by filing group. And I've actually gone ahead and run this report earlier and exported it. So what I really want to draw your attention to is the NOL reclass. So as you can see across the board, I've got a total of 148,680,000 with puts and takes from different entities. But with the filing group concept and the NOL automation on the parent, it is in essence summing up all of the activity, and the parent has the NOL balances sitting on their company in the deferred, and there is sufficient NOLs to offset the income that is here. So although it's showing individual taxable income or loss across all of them. We have netted to zero because we've offset it with NOLs at the parent. Alternatively, I also want to show you the return to provision area here that's posted, because we're going to take a look at the payables. And on the return to provision area, we've got a total of $1,498,000. So what does that mean on the payable? When the system posted a payable, and I've only done this on the federal, so we're not talking about state here, because the filing unit has to be activated at the jurisdiction. On the payables, as you can see, the individual entities that are also included in the filing group no longer have activity being posted to them from the automated posting within OneSource tax provision. The payable from the related to the provision itself and related to the return to provision all show up at the parent company. So there's a 34,261 receivable based on the net benefit that's showing up on the tax provision, because it had some additional cash tax adjustments going into the return basis provision number. And there was then a net payable related to the return to provision. So that's what we are seeing here. Hope this was helpful and look forward to seeing you on our next episode.